Welcome to the Irish Farmers Journal Weekly Podcast.
Hello and welcome to this week's Irish Farmers Journal podcast. I'm Amy Ford, Deputy News Editor, and this week I'm joined by Sheep and Schemes Editor Darren Carthy and Sustainability Specialist and Tillage Reporter Siobhan Walsh. Darren, we might start with you. Lamb prices are up by up to 10 cent a kilo in parts this week, which compared to other years might seem a bit unusual. What's happening in the trade?
Yeah, Amy, it's a real positive story, I suppose, that for the last 2 weeks we've seen prices recover strongly after, I suppose, a bit of pressure that we would have normally seen towards the middle of August as numbers start to increase. And it really goes back to the last 12 or 18 months being really positive in terms of demand running really strongly, and in cases, I suppose, outstripping supply. That if we look at last week's kill, there was 60,000 sheep killed, which isn't a small kill in any matter of means, but yet factory agents are keen to maximise that and to increase numbers, and that's keeping a strong floor underneath the market. That base quotes haven't really changed too much this week. They're generally around a sort of €6 to 6.20 per kilo mark, and general prices paid are 6.20 to 6.40 euro per kilo. And if we look at, as you say, where that is compared to the normal season trend, this time last year or this time in previous years, you generally would be, say, maybe reducing in price as you go into September, and it'd be nearly the end of September before you increase. And current prices are euro kilo above the corresponding week in 2020. And if we look at, say, maybe Board B analysis for the first 32 weeks of the year, it's even a more positive story in that the average lamb or hogget price is up by 143 per kilo. So you're 30 euros ahead up, which many farmers will say was necessary. That lamb prices were well below the cost of production, and we're also seeing them being eroded at the minute. But it's really a positive news story. This is driving a lot of optimism and a lot of confidence in the sector.
And do you think this is set to continue, Darren?
Yeah, there's really nothing, Amy, that you'd say would maybe put a lot of pressure on prices at the moment. That we were expecting to say when the Eid al-Adha festival passed that there would have been a lot of pressure coming on price, but that didn't really materialise. It materialised, I suppose, for a couple of weeks, in that there was some downward pressure as markets adjusted. But what we've seen is that markets, particularly across the main players in Europe, they have strengthened again. Demand is holding strong, and coronavirus hasn't really affected the sheep sector in the same way as it affected other meat proteins. And a lot of that goes back to sheep meat isn't, I suppose, popular on food service menus, and that's a fact we would have always bemoaned. But through successive lockdowns, it meant demand for sheep meat wasn't hit as hard, and the fact that people had more time, and particularly, I suppose, consumers in Germany, France, Belgium, the fact they had more time to, I suppose, maybe cook at home, and maybe had, in cases, a bit more disposable income, they invested in lamb, and we're seeing that continuing and the benefits of that holding strong. So I do think, Amy, that we're in for a good back end, because I don't see lamb numbers increasing significantly. There's a lot of ewe lambs being retained on farm, which is going to slow down the rate at which lambs are coming to finish. I think farmers will probably let lambs finish in a more normal method in some cases, in that they let them run on maybe for longer rather than invest in as much concentrates as previous years. Given the increase that we're seeing across the board in concentrate costs, I think that'll have a big say so will in the next few months. And I think really overall it'll generally be positive. The only one, I suppose, maybe cloud, but I think it's coming from more about there being a lot of aspiration or a lot of anticipation that, say, breeding sales would have increased in price from this time last year, and they've sort of eased or maybe settled at a lower than expected level, that they're probably in line with 2020 prices, which we do have to note were well above recent years. So I wouldn't say that the trade is maybe running under recent years, or that they haven't got the same kick. More rather that there's a lot more ewe hoggets in the system, and feature of that trade is that there is, I suppose, maybe less people in the market to buy replacements, and also some farmers thought that hogget prices in the old lambs would be more expensive and kept their own. So I think the trade is solid rather than anything, I suppose, maybe real excitement in it that many farmers were anticipated or had hoped to see.
Thanks for that update, Darren. And anyone listening can read more in sheep trends and in the news pages on lamb prices this week. Siobhan, we're going to move to you next. You have an interesting feature in this week's paper on a hydroponic farm. What exactly is a hydroponic farm, and what does it do?
Yeah, hi Amy. So yeah, the hydroponic farm in Dangan and Offaly, just outside it. So basically they're going to grow leafy greens, but they're growing them on water. So it's a bit of a contrast. They're on a Bord Namona site, so they're leasing a site from Bord Namona, and they're going to build a glass house, 10,500 metres squared in size, so just over 1 hectare. And in that glass house, they're going to grow leafy greens on water, and the water is basically filled with nutrients, and they'll be able to produce about 450 tons of leafy greens a year, which is a lot of leafy greens. And they won't be using any pesticides, so it'll be a controlled environment. So the temperature will be controlled, and they'll get the light. It'll be glass, so they'll get the light. They'll have to generate. They're looking at a renewable source to generate electricity for the light they'll need in the winter. And 80 to 90% of the water that they'll be using is going to be rainwater. It's going to be harvested. So really interesting and a really sustainable concept.
And Siobhan, will these types of farms become more popular in the future, do you think? Do you see these, being part of a niche sector in agriculture in, 10, 20 years' time?
Yeah, I think it's going to be a niche that's going to grow massively. Like around the world, we're hearing about vertical farms, and this is kind of similar. So those vertical farms are based on hydroponics. They're using water and nutrients to grow the plants, but they're generally in warehouses, and basically the plants are stacked one on top of the other, and there's shelves of plants being grown in those areas. And the whole idea of them is to provide local food to local businesses. So, there's loads of these farms, for example, in America. Let's say you have big warehouses outside of New York City, and they're growing salads and whatever, in lettuce or whatever it may be, in those warehouses. And then they're transporting it into New York for the restaurants. And there's loads of restaurants even have their own little hydroponic farms themselves. So like in Ireland, we import loads of leafy greens, and with like these leafy greens are coming from countries, they're coming a long distance. They have to be bagged and packed, and some of them are treated in the bags to ensure they have a better shelf life or whatever. And some of them that come have, they're known for high pesticide residues, like things like spinach are known for having high levels of are common for breaching the pesticide levels. So if we have this farm in County Offaly growing 450 tons of leafy greens and supplying to local businesses, we're cutting food miles, and we're producing this farm is going to produce a product that's extremely sustainable, harvesting the rainwater, no use of pesticides, and supplying local healthy food. And the plan is to have more of these farms around the country. Real Farm is the name of the company, and they're looking for €25 million in funding at the minute to build farms across Ireland and the UK. And that's how those aero farms started. They got funding from big investors, and those farms are thriving now.
Definitely one to watch. Siobhan, thanks for joining us, and we're going to hear from Siobhan again later in the show. Now we're going to head to the Dublin Mountains, and Ellen Durkin went to a Sustainable Uplands Agri-Environment Scheme farm walk for us recently, and there she spoke to the project manager of the scheme and a farmer taking part in the scheme, which is called SUIS.
Well, the first reason I had I thought I would get SUIS to help me to burn the hill, because I'm surrounded by forest, and actually burning the hill is a major problem. You need a lot of help. Then they were giving me feed buckets to put out in the winter time to keep the sheep out on the thing. That's another good incentive. And then, as I said, they sent they sent lads to cut with weed cutters to make a fire track around the hill. So they've been a help. But a lot of the measures, as I said, they were promoting were things that I was already doing. Like I used to put out buckets myself, and I used to keep the sheep on the hill in the winter time.
Our number one achievement, I suppose, is we've engaged with farmers to manage the habitats, and particularly in relation to commonages, because we have formed these commonage groups which has brought farmers together with the common purpose of managing these hills together, as opposed to trying to deal with them all individually. And the other thing is we have the farmers we're working with, they're all more conscious of farming them for biodiversity and for the habitats rather than just for what they're going to get back out with sheep. Well, we're in the uplands, so it's the heathland and peatland and upland grasslands. Why are we concerned about those? Well, they're designated habitats, and it's one habitat from the EU. So the country here has a legal obligation to maintain them, but they're the habitats we have in the uplands, so they're the ones we're concentrating to try and maintain. The types of work we've done is for bracken control. We've tried to control it using spraying, both by tractor sprayer and knapsack sprayers. We've been doing bracken bruising with a bruiser. We've introduced cattle, and we've also trialled the use of a weed wiper. For gorse and for heather, we've been looking at controlled burning and also mulching or cutting, both by machine and by hand with brush cutters. The other options then we have been working with, we've reintroduced cattle onto a number of our sites, and we have done a lot of tree planting. In terms of how the farmers are paid, well, when we set up the project originally, we were only paying farmers for the work that they were doing, so they only got paid based on their time or income foregone. In 21, we've introduced a score payment system, so we score the habitats and the farmers would receive a payment based on those scores. The reason is that this is very topical at the minute and has been promoted as being the future of agri-environmental schemes, so we just want to put it out there, see is it appropriate for upland and particularly commonage farmers, or should we be trying to keep away from it?
Next up, we're going to hear from the tillage team of Andy Doyle, Stephen Robb and Siobhan Walsh. The team has an update on the cereal harvest coming to a close, grain prices and also on carbon prices.
So guys, another good week of harvest progress made. Indeed, many were wrapped up by the time we were talking last week, but indeed there was still plenty to be done, and I think it's comfortable to say now that most guys are pretty much there or nearly there in terms of finishing the cereal harvest. So I suppose just in your own areas and what you've been hearing throughout the week, Andy, we'll start with yourself. What's been going on?
Stephen, look, it was a great week. A lot of work done. Winter wheat now virtually wrapped up, I would say, all over the country. Probably bits of spring oats and spring wheat left to be cut. I'm sure there's a field of everything kind of sitting somewhere, but effectively the harvest is over. It's the odd one that it was sown very late or for some other reason that's now waiting to be done. But thankfully it's virtually all wrapped up and in good conditions at low moistures, good quality, and generally good yields with a few exceptionals and a few disappointments. And that's probably the average of where winter wheat has been across the country.
Siobhan, what are you hearing?
Yeah, plenty of activity in the last week, Stephen. You know, the last of the spring barley crops are in this area anyway. Seem to be moved. People were drawn in the last few bits of grain maybe that they had left in sheds. I saw straw being turned that had been left on the ground since the break in the weather. So people are getting on top of their work. I see plenty of roll ground around the country where cover crops have been put in. So it's great to see them going in early. A few people starting on their beans. Some bean crops have been cut and people planting oilseed rape. So I think people are very happy.
Okay, we might just stick to that for a second. Siobhan, beans, what are you hearing in terms of yield reports, or indeed is there much even cut?
Yeah, look, it's early, Stephen. There is crops cut, but crops are very variable around the country. And I suppose they have been kind of variable all year. Those two kind of, the drought in the middle of the season probably has brought them in a bit quicker. Of the few crops that I've heard being cut, I think farmers will be happy. They're good yields, not great yields, but I'm hearing 2 ton, 1.9 ton, and at good moistures. of about 16%. So look, it's well, they're not hectic yields, they're good yields, and I think people will be happy to get their beans cut early in September. And getting them cut before this break in the weather comes now this week. Hopefully some people will get started on those crops.
Yeah, just Siobhan, I'll stick with yourself here for a second. Just in terms of spring barley, you mentioned that it's virtually wrapped up at this stage. I mean, I know that there's still some crops to be cut, around the country as such. Look, we're only after finishing our sales up here fairly recently. Yields are okay. They're certainly not disappointing, but they're far from exceptional. I suppose as the harvest went on, particularly over the past week, what have you been hearing yield-wise in terms of spring barley?
Yeah, so there are a few crops to be cut still, and that's generally the way it goes. But yields did come back as harvest went on, and it's important to note that not everybody across the country has got the big yields that we heard about in the early harvest. So on those later sown crops, there was 2.5s, 2.7s, and some of them still were touching the 3 ton. But yields were back on those later sown crops. So it definitely shows try get those crops in good conditions and as early as possible. But on the bright side, quality still held. And people were bringing in good grain to merchants. There's good Irish grain out there. 62 kph is probably the lowest end of the scale. So from 62 up, that's where that was coming in, and Meisters were still good. Look, we had a great week there in the past week, and Meisters were still coming in, 17% and in or around that.
I'm assuming that the bulk of the malting barley was cut by last week.
Yeah, there was. Look, there was still bits to go in, especially down around Wexford, but quality was still holding. So farmers were still getting it over the weighbridge for their malt and barley. Some of the later sown stuff was erring on the side of brewing, but farmers were still filling their contracts.
Okay, Andy, we'll take a look at some other spring cereals here. I know that spring wheat has begun in some areas, albeit only in small amounts. Yield wise, we would have been hearing between 3 and 3.5, which crops have been looking reasonably well all year, and look, I think growers will be happy with 3.5 plus. Spring oats is also underway or largely wrapped up. What have you been hearing in terms of yield?
Somewhat similar yield levels from what I've been hearing, Stephen, kind of the 3 ton up to 3.5 ton. Hadn't heard that many of the 3.5s up to this point in time. But you're only beginning to hear those reports now because those crops were really only coming out of it this week. I think there was a lot of good spring oat crops out there. We just have to wait to see what they will actually put across the weighbridge. The crop looked well all year, as did spring wheat. I thought looked quite well all year, and maybe we might have thought that they would have done a little bit more, but not every crop can't be brilliant all of the time. And I guess that's kind of where the bottom line is. I think Siobhan's last comment is important, though, that where some of these crops were being put in late, I think, you don't really have a realistic expectation that they will produce the very big yields. It takes good land and a good set of overall husbandry to get the really good yields. And if you get them out of late sown crops, you're lucky, rather than just good at what you do. Because things have to go in your favour. They will occasionally, but most of the time they'll favour the way things are better, where they are better done or done better.
And a crop I've been fascinated with all year is hybrid winter rye. Watching this development and talking to growers and whatnot. There has been crops cut. There was crops cut by the time we were talking last week, but there has been more cut over the course of the week. Do we have any indication on how these crops did?
Yes, Stephen, we have. Look at the acreage. The overall acreage is not that high, but the crop is of considerable interest to people because it seems to fit into a window between rape and winter barley planting, which it can be sown safely in, and that's important. The yields that we're getting from the crops would range from kind of 3.3, probably more 3.5s, and up to 4 ton an acre. That's credible performance, particularly if it's in a slot in the rotation where it wouldn't suit, wheat or barley because of high take-all risk or other things like that. So it certainly was good. I think people were caught slightly offside because most of the year it seemed to be developing very rapidly, and it seemed to be hitting for a relatively early harvest slot, but that's not the way it matured. And it kind of came in, a lot of the crops came in kind of clashing with spring barley, winter wheat, and that wasn't quite what people were expecting. But, you know, nonetheless, the crop was good. Harvesting, look, there's a lot of straw on rape. It takes care, or on rye, it takes careful growth regulator management to get it right. There were certainly bits of lodging out there in crops, and the crops that weren't lodged, they were still quite tall in terms of getting them into the combine. But overall, you know, it's a crop with potential, and I think we would have to recommend that people try a bit in places in the rotation that particularly do not suit winter wheat or winter barley. And just see how it goes for you.
Excellent. Okay, well, maybe just on straw, Siobhan, a lot of straws come onto the market over the past week, which we all knew was going to happen. What kind of an influence has that had on prices that you're hearing, or is it too early to tell?
Probably still a little bit too early to tell. You know, those crops that were being cut, there's still plenty of crops being baled, and straw starting to move out of fields now in the past week. Like the main price is still holding at €20. You know, if you're in the Midlands, Tipperary, Cork, up to the northeast, €20 is the kind of standard rate still for a 4x4 bale of barley straw. Down in Wexford, the price is starting to come down, so there's straw moving in Wexford for €15 per bale. But look, Wexford is an exception. The majority of the straw in Wexford moves out of the county, and it's you know, it's furthest away from the places that need straw most. So if we go to those areas that probably, you know, need straw most, so into the west and northwest. Just I'm looking at my article for the paper this week on straw prices, and you know, €23 to €26 per bale delivered in Galway, and you know, in parts of Galway where there's local straw, it's about €18 where people are collecting it out with the fields themselves. So it's similar to the heavier tillage areas. And then if you go up further north, there's prices of €28 and €30 delivered. There's good value probably in the 8x4x3s and some of the bigger squares, so they're moving for between €40 and €45 per bale. But I suppose, you know, lots of straw still to come onto the market, so we'll see where it ends up. But certainly people paying that €20 per bale for a 4x4 barley straw.
I mean, the straw incorporation measure, I mean, it was a fantastic scheme from a tillage farmer's point of view, and it has certainly had some impact on the straw market. But look, it's probably too early to really call the ultimate impact. But I mean, the whole premise of the scheme is to return carbon into the soil, and there's interesting things happening in the carbon market at the moment, isn't there, Siobhan?
Yeah, so this is in the paper now as well this week, Stephen. So carbon, I just looked at the price there this morning and yesterday, and it's at €60. It's gone over €60 now per tonne. So that's on the carbon market. So people who emit carbon have to buy carbon credits. And you know, farmers, we're always talking about it in the paper. Farmers can sequester carbon, and hopefully they'll start to trade carbon in the near future. But that carbon now has jumped from about €33 in January of this year to over €60 now in August, and it's been on a steady increase all year. It's kind of plateaued at certain points, but just to give you an example on how quick it's moved, like on the 19th of August, it was at I think it was at €56. I'm after losing my page now, but it's jumped considerably even in the last 2 weeks. And just to put that into perspective, you know, at a price of €60 per tonne on carbon, the value of carbon in a bale of spring barley straw, of an 8-tonne crop of spring barley straw, the value of that carbon is about €2.11 per bale. So, you know, if people, you know, straw has a value. We talked about P&K value last week, and we have to consider all these things when we're selling it. So, you know, the straw incorporation measure has put €10 on the value of your straw. You're paying €4 to bale it. That's €14. You have €2 there for your carbon. and your P&K is at about €2.25. So people need to take all those things into account when they're selling their straw.
Yeah, and I think the really interesting thing about carbon markets is that it's shown no sign of stopping, and indeed looking at the projections, it has the scope to double. So it does within the coming years. I don't think anyone expected it to increase this quickly, but certainly 120 a tonne could be very achievable. Okay, we'll move on in the interest of time here. Andy, before we just touch on prices, you made an interesting comment when we were talking off air, just in relation to what you've been hearing for comments from growers in terms of crop performance and rotation, and particularly non-cereal rotation. Can I just elaborate on that a little bit?
Yes, indeed, Stephen. I think the singular comment that I get from growers wherever I speak to them in the country is the benefit that they're seeing in yields this year from having non-cereal breaks in the rotation. That's kind of maybe potatoes or beet or oilseed rape, beans, maize, any of those crops. This year's crops in those fields have exceeded expectations for the majority of growers. They were kind of surprised when they went in. They weren't expecting the yields that came off. And if you started in one of those fields and went into a cereal rotation field, you were generally disappointed. So I think more and more growers are beginning to kind of experience the kind of things that we've been saying over the past few years, that good rotations are a key to optimizing crop performance, because you can get more out by putting less in those situations. And that's the key to efficiency any and every day of the week. So I'm hoping that more people will be looking in that direction. We already hear that there is quite an interest in oilseed rape planting, with a lot of activity out there on the land, and I hope that continues. There's still plenty of time to get it in, because it is a very good break crop, and it's not necessarily a very expensive crop to grow if you can do or use all the modern technologies in there. And the one other thing that I would say on that is that forward prices at the moment are strong. I don't expect them to remain that strong, because I think that Canada won't necessarily have another bad harvest year, which is a significant driver this year. And the Australians, which will be the other big exporter into Europe, they will follow the price much more so than European farmers follow the price. So I'd expect that they'll probably have a lot of rape in the market next year.
So in other words, if a grower has an opportunity to maybe lock in some forward prices, if they think it's a good price, it could be a good move this year.
I think it would be almost foolish this year not to be locking in around the time you're planting.
I suppose just in terms, just keep going with prices. Are we any closer to hearing any real native prices for green barley and wheat this year? Now that we're coming towards the end of the harvest.
Probably no closer, Stephen, in that most buyers tend to keep their powder relatively dry until after the co-ops have announced what they're doing. That said, I think that there's nobody out there that kind of believes that the price of green barley will be less than €200 a tonne. And at the moment, I think a lot of people would be looking towards the possibility of it being closer to 205 when the time comes. It's interesting to watch the screens over the past few days, and they have very much been down and then up again. And yesterday was a big drop day in Chicago, but it's gaining it again today. All markets are gaining again today. A little bit of news drives the futures markets. Physical markets are much more stable. We've been looking at kind of 245, 247 for dry wheat now for the past number of weeks. And a lot of people think that that's where it's going to be, or maybe even a little better going forward. That would take the price of green wheat back to something in the order of 215 a tonne, with barley probably coming in about a 10 or under that. So that's kind of where the likes of me would be thinking, where I know some others are thinking, but it's not necessarily where the price will be when the time comes. It could be weaker than that if things go wrong, but the downside on it, I would say, is relatively low. The wheat markets at the moment have been driven by milling wheat, and we're not in the milling wheat market, unfortunately. But that's the driver, and we have to be careful not to expect that we're going to get the milling wheat prices for feed wheats, because we still have to compete with maize in those markets. And while maize is a good deal more expensive than it was, I mean, at the moment, imported maize export is about 255. 18 months ago, and I certainly can't say 12 months ago, but 18 months ago, that would have been kind of 170-ish. And that's kind of what's happening, and that's the background to the major driver in the increase in feed prices that people are experiencing around the country. So all in all, we certainly have good prices to look forward to. People might always wish they were better, but the one comment that I would always make is that there's nothing that will cure high prices like high prices.
That's for sure. It's become an infamous phrase of yours by this stage, Andy. So it has. So good prices, good yields, good weather. It's going to be a year to remember. But I suppose looking at the week ahead, I mean, yeah, we're coming towards the end of the harvest. I'm sure some bean crops will be knocked out over the next 7 days, and indeed the majority of the whatever bits of spring cereals to be tidied up will be tidied up, as will the straw. But there's still plenty of field work to do in terms of rape drilling, in terms of cover crop establishment, field maintenance, draining, everything. So in other words, we still need to weather the hold. Andy, have you had a chance to look at the weather forecast in the journal this week yet?
I was listening. No, not the weather forecast in the journal. I don't have it at this point in time, but listening to Evelyn Cusack on the radio this morning, she was talking about the fact that we will see a weather break coming. At the moment, I still think it's the second half of next week, and hopefully if it stays away that long, then everything will get wrapped up. But don't take the weather for granted, because just because there isn't rain in the forecast doesn't necessarily mean that it'll be a good day. You can get a grey, misty day that you won't get anything done. So just get the work done as soon as you can, and then you're safe. Those grey days and little bits of rain coming around the corner, they're good for other things. If you have your crops caught and your straw cleared, then it makes for good planting weather as well. And there is plenty of time yet to get some oilseed rape planted, and that's an important crop, I think, for people to be considering as of now. After that, we just look forward to I suppose the time when prices are announced, and hopefully we'll be able to commandeer all the three ingredients of a good harvest: price, yield, and weather, and jot them into the memory book.
Stephen, I might just come in there before you finish. I noticed I gave the per hectare price of the carbon on the straw bales. It's 92 cents per bale, so it's over the €2 per hectare, just to clarify that.
Okay, Siobhan, thanks for clarifying that. And guys, look, thanks for all of your insight and input this week. Another good conversation, but in the interest of time, we are going to have to wrap it up. So Andy and Siobhan, thanks again. Everyone who's listening, thanks for tuning in. And until next week, I'm Stephen Robb. Stay safe, stay harvesting.
Finally, this week, our machinery correspondent Gary Abbott speaks with the recently appointed Executive Director of the FTMTA, Michael Farrelly, and his vision for the FTMTA.
So Michael, you're very welcome.
Thanks, Gary. Delighted to be here.
You've got your third week completed in the role. How's it been so far?
Thanks. Yeah, it's been great so far. It's been a busy 3 weeks. Just finding my way around the organisation and meeting the council members and some of the members indeed. So it's been a busy but good 3 weeks.
Are you excited, Michael, for what lies ahead within the industry?
Yeah, I'm very excited. Somebody asked me what attracted me to this industry or the association, and I asked them, was it not obvious? But I'm very excited to be representing the sector, because I think our members are made up of global leading brands, Indigenous Irish businesses who are winning on the international stage, and dealerships, which are the backbone of the Irish economy. And I'm really excited to be, and proud to be able to represent them and their interests.
And Michael, what are the main issues, if any, that need to be addressed at the moment within the industry?
Well, I think, that the industry doesn't get the recognition that it deserves in terms of it being the backbone of the Irish economy and the rural Irish economy. So I think that's one thing. I think the other obvious one is the labour, the labour shortage, should I say, or the challenge of attracting young people into the industry. I think we have a job work to do there, and I think that can be easily done by highlighting to them people who have succeeded in the industry and where their career paths are in the industry. I think one of the other issues is the continual pressure that is coming on dealerships from some of their customers with unrealistic expectations and who don't fully understand what companies have invested in supporting their customers, and I think there's a bit of work to be done around that as well.
Mm-hmm. And what are your visions, Michael, going forward for the FTMTA? What would you like to achieve in your time?
Well, what I'd like to achieve is what I've outlined already. I'd like to have the industry recognised for the contribution it makes to the overall economy, and for the jobs it creates in rural Ireland, and the fact that it allows people to have a realistic expectation that they can return to the area that they grew up in and remain a part of that community. And so that's what I'd like to do.
Mm-hmm. And I suppose, Michael, the question on everybody's minds at the moment is, will we see a show next spring in Punchestown?
Well, Gary, we're planning ahead, full steam ahead for the 3rd, 4th and 5th of February in Punchestown. Now, there is the caveat that we have to await government guidelines, which we're hoping will be outlined in the next few days. And if that goes in the right direction, we hope to have a show on those 3 dates. There's great interest and great demand for exhibition space at the moment. And, if we run the show, it'll be the first show that will have been held in almost 2 years. And there's, I think, a great demand. There's lots of people that want to get back to a show and something of that nature. It's a very popular show, as you know. So
yeah, that's for sure. Everyone's itching to get back out to shows again.
Yeah.
Thank you very much for your time, Michael. Thanks very much.
You're very welcome, Gary. Thank you.
Thanks for joining us this week, and we'll chat to you all next week.